We go now to the cow guy at Marex Solutions, Scott Shellady, on the impact of all of that. How do you think this is sorting out thus far? It's always risky to come to any conclusions before we know what happens, but what do you think?
Right, yeah, I mean, there still could be, we'll probably still have some scares. I mean, who's kidding who? But, I was up every 2 hours last night checking the markets, trying to build a picture for myself to come in today. And, this is a dramatic turnaround from where we were just even last night at 10 a.m. Central. So it's a pressure cooker, and we took a lot of the pressure off. I don't think the pressure's totally off. Yes, we haven't heard anything from the Iranians. We haven't heard anything from the Democrats either. So there's a lot to flesh out here. But it seems as though for the time being, we've taken that pressure cooker, the pressure off the pressure cooker, and we've actually might have taken a little bit of an exit ramp here, just so that we haven't really heightened things. And I think that's good. And the markets are telling us they like that. Take a look at the VIX, too. The VIX, I think, slipped just under 13 before I got in the chair here. So everything's telling us that they're pleased with the outcome, and we might have averted something here. But you know what? That doesn't mean it's over.
Right. You're referring to that volatility index, which measures, to a certain degree, a sense of fear or lack thereof. Are the markets ahead of themselves? What do you think?
Yeah, sometimes they can get a little bit too buoyant or out over their skis, and I think what's going to be the truth serum is going to be earnings. We're going to have to wait and see how those come out. And Walgreens down hard today. That was a little bit of a surprise. So we're going to need to see some real economic numbers, and we've got on-farm payroll on Friday. We're going to need to see some real economic numbers come in and bolster these stock prices where they are. But I will say this: all year last year, as I sat in this chair, we talked about the headwinds, and the headwinds were China trade, Brexit, and the USMCA. Well, you know what? Those things have kind of turned around and have been a tailwind so far in the first few days this year, and look to be going that way for the rest of the year. And if that's the case, he's going to be hard to beat, and these markets look pretty good.
So let me ask you a little bit. You talked about the employment report that's due out on Friday, a good telegraph indicator for that, not all the time, but a lot of time, is the private sector job growth, the ADP survey, which was surprisingly strong. 202,000 jobs added. I think the estimate was closer to 145, 150,000. What do you think of that?
Well, I'm glad. I think the conundrum in the whole thing is, Neil, is that we're not really seeing a ton of wage inflation. We're not seeing these employers fight for employees like I would have thought with a 3.5% unemployment rate. So something's going on out there. We're putting in the engine is not getting when we're not getting the same out of the exhaust, and there's something up. So I want to see more this year about how maybe wage inflation is just so elastic it's going to fling back into play here, and we're going to see a lot of inflation all of a sudden. But to date, with the numbers that we're seeing as far as jobs created and that unemployment rate, we're just not seeing it come through. So I'm waiting for that, because when that becomes an issue, that is something inflationary that the Fed's going to look at, and that could change the picture rather quickly.
Thank you, my friend. Always good catching up with you. Much appreciated.